Okay, the changes with effect from 1/4/2025 in income taxes. A new financial statement format for the financial year 2024-25 is issued by the ICAI for a non-corporate entities, which we have to follow for the assessment year 2025-26. That we are going to discuss about it. The first one. The second one is ITRU. The updated return due date has been extended. Now we can file updated return by the from the end of assessment year up to 48 months. Okay, that means up to 4 years we could file the updated return. And the recent changes in the threshold limit of TDS with effect from 1/4/2025, changes in TCS, changes in income from capital gain, and recent changes in ITR forms. So these are the 7 topics we are going to discuss. The first one is new financial statement for non-corporate entities. So non-corporate entities mean entities other than a company or body corporate. Okay, for example, a proprietorship HUF firm, AOP, POI, society, trust, statutory body. So these are the non-corporate entities. The Accounting Standard Board of ICAI in 2022 issued a technical guide on financial statement for non-corporate entities and limited liability partnerships, and a guidance note issued on August 2023, which is mandatorily applicable from 1/4/2024. That means for the financial year 2024-25, we have to prepare the financial statement in this format only. Okay, it is mandated by the ICAI, so the CA has to follow this format. Okay, so it is mandatory for the tax audit assessee. The old T format may not be accepted by the banks. So in this case also we have to follow the new formats. The new format link is given and all the guidelines, note and technical guidelines link is given in the PPT. Just a minute, I am downloading the format. Yes. So this is the specific format given by the non-corporate entities who are already prepared the balance sheet for the companies. The same format, the more or less it is the same format. We have to give a comparison for the previous year figures and current year figures. The P&L and balance sheet are fixed entries. What are the breakups all has to be given in the schedules only. Notes to the P&L and notes to the profit and loss account has to be given the breakup. The no format has to be changed. For example, it is a statement of profit and loss account. It only has a revenue from operations and expenses. So this expenses has a A to E, 5 rows only. We can enter the breakups in schedules only. Okay. Whoever already followed the companies that format, it is easy for them. But for the non-tax audit assessee also we have to follow, because the bank may not be accept the old format. Okay. The balance sheet in a T format, we are having a left side of a liability and right side assets. But in a new format, it is a vertical format. The equity, in the old format we mentioned as a capital. In the new format, it is a equity, owner's fund, and liability is a current and non-current liabilities. Assets are fabricated into current and non-current assets. Okay. And the profit and loss account. The profit and loss account also a vertical format. It only have a 2 separate sections. One is the income, which increase the income is a defined as an increase in economic benefit, and another one is expenses. Expenses is the decrease in economic benefits. Okay. And The another issue is in new format, we have to round off the value to at least the nearest 100 rupees as mandated in the Companies Law, Companies Act. Even for a non-corporate entities, we have to rounding off to the nearest 100. If your total income is below 100 crore, if your income is above 100 crore, we have to round off nearest at least one in lakh. Okay. So this rounding off also a mandatory one. For non-compliance, if it is, if you have not opted the new format, the disciplinary action may be taken by the ICAI. It is only applicable for a CA. So even for a non-tax audit assessee, CA won't put his signature or give a UDIN for the P&L balance sheet, which is in a old format. So we have to follow the new format only. It is a practical issue for the non-tax audit assessees. And we have to forget the old terminology. We have to learn the new terminology for the new financial statement. First one is old one is a horizontal form. So now it is a vertical form. The balance sheet we have mentioned as a fixed asset. The term fixed asset is used in the balance sheet in a previous format. Now, property, plant, and equipment. This is the word used for the fixed asset. And the sundry debtors is replaced by the trade receivables, and sundry creditors will be replaced by the trade payables. We are not going to use the word sales. We have to use the revenue from operations. For the income tax, the new terminology is tax expenses. It is not a profit and loss account. Hereafter, it is called as a statement of profit and loss. Now, the word rent is not in this format. The lease, or instead of rent, the word lease is used. Okay. Then the MSME, micro, small, medium enterprises classification is increased through the Finance Act, last Finance Act. The investment limit is 2.5 times increased. The turnover limit is doubled. Okay. If you are a micro enterprises, if your investment is 2.5 crore or a turnover is below 10 crore, you are considered as a micro enterprises. If your investment is 25 crore and turnover is 100 crore, you will be considered as a small enterprises. So before that, this investment limit is 1 and 5 crore. This is the 10 crore and 50 crore. The old limit is this is the 50 crore, 250 crore. Now it is the investment limit is 2.5 times increased and the turnover limit is 2 times increased. Okay. So due to this, the suppliers covered under section 43 BH are more. Okay. So the last year, the person in the medium enterprises, now he may be a small enterprises due to the increase in the turnover limit and investment limit. So any outstanding to him may be covered under section 43 BH of Income Tax Act. And for the financial year 2025-26, the slab rate is increased to 12 lakhs, up to 12 lakhs, no tax is payable. Rebate under 87A is given, and the slab rate is split into 4 lakhs, up to 4 lakhs, no tax is payable. If your income is 4 to 8 lakhs, that 4 lakhs, 5% is taxable. So every 4 lakh income increases, the tax 5% increases. So this is the new slab rate given, and this slab rate applicable for a new tax regime only. Okay, it is applicable for the individual HUF, AOP, POA, etc. And if you are having a special income under special rate, for example, long-term capital gain and short-term capital gain, then rebate under section 87A will not be applicable for the special rates income. And for this, if you are a salaried person, standard deduction 75,000 also applicable. Marginal relief also given, available for the new tax regime. What is a marginal relief? Marginal relief means for your income marginally increasing. For example, your taxable income after all the available deductions, your taxable income is 12.5 sorry 12 lakh 5,000. So your income only marginally increasing 5,000. As per tax slab rate, you have to pay the 60,750. For the income increased for the 5,000, whether we have to pay the tax amount 60,000, no need to pay the tax. That's why the whichever is lower. So whichever is lower can be paid as a tax. Balance will be given as a marginal relief. For example, if your income increased for 5,000, you need not to pay tax as per the slab rate 60,000. You may pay the whichever is lower. You may pay 5,000 only. For example, if your income is 12 lakh 100 rupees, you may pay 100 rupees only as a tax. Okay. So when your income is 12 lakh 70,588, that slab rate also 70,588. So in such a case, the marginal relief is 0. Thereafter, the tax will be payable as per the slab rate. Okay. The rate of TDS. There is no changes in the rate of TDS from 1/4/2025 because in Finance Act 2024 itself, with effect from 1st October 2025, the rate changes has been affected. Now, from 1/4/2025, only the threshold limit has been revised. For example, under Section 193, the threshold limit for interest on securities for deducting TDS is increased to 10,000. Under Section 194A, it is an interest other than securities. For a senior citizen, the revised threshold limit is 1 lakh. Before that period, 50,000 it is. If the interest is paid by the bank, post office or cooperative society, the threshold limit is revised to 50,000. The existing limit is 40,000. For interest other than securities, for other cases, the threshold limit is increased to 10,000. Under Section 194, the dividend threshold limit, TDS on dividend, threshold limit is increased to 10,000. 194K also increased to 10,000. And Section 194B and BB, winning from lotteries and horse race, the revised threshold limit is 10,000. Even existing limit also over 10,000, but the difference is the existing limit is overall the annual income is 10,000. For example, last year, if for the financial year 2024-25, I am having a winning from horse race 9,000 on the month of May 2024. On June, I'm again having a winning from lottery of 2,000. So in this case, I have a 11,000 aggregately. So the TDS is applicable for both. But from 1/4/2025, every winning has to be above 10,000 to deduct TDS. If a winning is below 10,000, TDS need not to be deducted. Okay, this is the changes. It is the revised threshold limit. And for a commission, whether it is an insurance commission or a commission by way of lottery tickets or any other commission, the threshold limit is increased from 15,000 to 20,000. Up to 20,000, we need not to deduct TDS on commission. Okay. Under Section 194I, the threshold limit for rent, the existing threshold limit is 2.4 lakh per annum. Now, from 1/4/2025, the threshold limit is 50,000 per month. Okay. Even if you are only paying March month rent, for example, on the year end, you are paying March month rent as a 51,000. You have to deduct TDS for the 51,000 because the threshold limit is per month 50,000. But in the last year, our annual rent has to be calculated. For the 2024-25, I am only paying 51,000 for the March. I need not to deduct TDS because the threshold limit is 2.4 lakh. Okay, this is the major significant changes in the TDS. And another one is 194J, fees for professional and technical services. The existing threshold limit is 30,000. Now the threshold limit is increased to 50,000. Okay. So the major changes in TDS is only the 4 items we could say. So the other items are majorly not deducted by ours or our client. Okay. So what are the 4 major items? One is a commission. So the commission threshold limit is increased to 15 to 20. And the rent threshold limit is increased from 2.4 lakh per annum to 50,000 per month. And the interest. So these interests are not deducted by majorly our clients. So this interest, 194A, interest other than securities for other cases increased from 5,000 to 10,000. And the fourth one is 194J, from 30,000 to 50,000. Okay. So these are the 4 common TDS has to be considered. And another one is TDS under section 194T. Is a new section inserted with effect from 1/4/2025. 10% TDS has to be deducted by a partnership from any payment to the partners by way of salary, remuneration, commission, bonus, or interest. If the threshold limit is 20,000 per annum. Okay, this is the new section with effect from 1/4/2025. And so by inserting this section, every firm has to apply for a TAN and have to deduct TDS, because the 20,000 is a very least amount. Everyone, every partner getting a salary or interest, usually it will be above the 20,000 only. Okay. Then the amendment in TCS with the effect from 1/4/2025. The TCS on liberalized remittance scheme has been increased from 7 lakh to 10 lakh. Okay. So if you may make foreign payment under liberalized remittance scheme up to 10 lakh, no TCS will be collected from the bank. And another remittance one is removed. If you are remit amount for education out of loan taken in India, then for that remittance TCS is removed. Okay. And a TCS on timber and forest produce is reduced to 2%. TCS under section 206C1H is omitted with the effect from 1/4/2025. Okay. So section 206C1H is about sale of goods. Okay. So this section is omitted with the effect from 1/4/2025. If you are having a previous turnover above 10 crore and you are supplying 50 lakh, more than 50 lakh to a person, you need not to collect TCS, but the recipient, the buyer, has to deduct TDS under section 194Q. So 194Q only applicable, 206C1H is omitted. And recently in April, some goods are notified under section 206C1F. I hereby attach the list of goods in the next window. So what is section 206C1F of income tax? It is inserted with the effect from 1st January 2025. It is a new section only. A seller who receives any amount as a consideration for a sale of motor vehicle or any other goods as may be notified, for the value exceeding 10 lakh, as sum equal to 1% has to be collected as a TCS. Okay, for a sale of motor vehicle and any other goods notified. By notification dated 22nd April 2025, these are the 10 goods notified for the collection of TCS. A wristwatch, any art piece, antiques, painting, sculpture, or any collectibles such as a coin, stamp, yacht, roving boat. Actually, these are the luxury items. For these luxury items, if you purchase more than 10 lakh, sorry, if you sell more than 10 lakh, these notified luxury items, you have to collect TCS at the rate of 1%. Okay. And section 206 AB is omitted with effect from 1st April 2025. What is it? Section 206 AB? It is a higher deduction of TDS. If a specified person means a person who has a credit of TDS more than 50,000 in the previous year and he has not filed the ITR. In that case, the deductor has to deduct the highest rate. The higher rate will be the twice the rate or 5%, whichever is higher. For example, I am a deductor. I have to deduct TDS under section 194C. The supplier has not filed the ITR and he has a more than 50,000 TDS credit in the last financial year. So in that case, I have to deduct 5%. So double the rate or 5%, whichever is higher. So highest rate will be a 5%. If I have to deduct TDS under 194J, that twice the rate, 20% has to be deducted as a higher rate. So this higher TDS and TCS is omitted with effect from 1/4/2025. So as per section 139(8)(a), updated return can be filed within 24 months from the end of the assessment year. Now it has been extended to 48 months. Okay. Provided additional tax has to be paid. If you are filing within 12 months from the end of the assessment year, 25% additional tax has to be paid. Filed after 12 months, but within 24 months, you have to pay 50% additional tax. Filing after 24 months, but before 36 months, we have to pay 60% additional tax. After 36 months, filing before 48 months, you have to pay 70% of additional tax. Okay. So as per this amendment, we could file ITRU for the financial year 2021, assessment year 21-22 until 31st March 2026. So as of now, currently we could file 5 years ITR, but till now ITRU is not enabled for the previous years. It will be enabled shortly in the ITR portal. Okay. As of now, we could file it for the assessment year 23-24, 24-25, and 25-26. Okay. So the next one is tax on long-term capital gain. By Finance Act 2024 number 2, the tax on long-term capital gain and short-term capital gain has been changed. The Finance Act dated 23rd/7/2024. So if a transfer takes place on or before 23rd July 2024, the applicable tax rate is 20% with indexation. If the transfer takes place after 23rd July 2024, the flat rate is 12.5% without any indexation. Okay. Due to the lesser time, I am skipping this chapter, but not an issue. I hereby attached a detailed video. Okay. This video contains 30 minutes of a detailed explanation of the slides, the 10 slides. So you may understand briefly. Okay. And this calculation is applicable for a new tax regime and old tax regime. The 12.5% rate is applicable for both. And there is a Excel template also I hereby attached. You may download this Excel template and calculate the applicable tax. The due date for filing ITR has been extended from 31st July to 15th September. The reason is This is the reason. I think the long-term capital gain, the changes in long-term capital gain is the main reason for the non-availability of ITC form till date and extension of ITR filing due date. Okay. Because each and every column has to be updated in the ITR forms to calculate the tax. Even in ITR 3 has around more than 20 pages for a capital gain schedules only. So these are the reasons I think for the extension of filing ITR. Okay. Now we are going to see the major changes in ITR form. So ITR 1 and ITR 4 only enabled the GST portal. Today, the online filing of ITR 1 and ITR 4 is also enabled. The offline utility is ITR 1 and ITR 4 is given. What are the changes in ITR 1? The foremost change is we could declare long-term capital gain in ITR 1. So up to last year, up to financial year 2023-24, we cannot declare long-term capital gain on ITR 1. We have to file ITR 2 for the declaration of capital gain. But in ITR 1, the long-term capital gain covered under section 112A, where your income is below the exemption limit. For example, if your long-term capital gain is below 1.25 lakhs, it is exempted under section 112A. So if your income is below that limit, you can declare in ITR 1 itself. But you cannot carry forward or set off the loss in the ITR 1. Okay. If you want to carry forward or set off the loss, you have to go to the ITR 2 only. In the ITR 1 Excel utility, the table number 7A, before tax payable and total income, there is a row for income on which no tax is payable on long-term capital gain under section 112A, not chargeable to income tax. We have to declare the sale consideration and cost of acquisition, and the difference will be an exempt supply. It will not be added to the it will not be added for the rebate calculation also. It is just considered as an exempt supply. Okay. And another option is given. We could assess the income tax calculator in this offline utility. Okay, there is a option to calculate tax. And the same changes in ITR 4 also, the long-term capital gain. If you are having a capital gain, which are covered under section 112A, and the long-term capital gain is below the exemption limit 1.25 lakhs, you may declare the said income in ITR 4 itself. So this is the major changes in ITR 4. And another one is declaration of Form 10 IEE. So whether you are opting Form 10 IEA or you have already opted, whether you are continue to opted in this year. So this questions are in the offline utility and ITR forms. So we could select yes or no by entering the acknowledgement number. We could clearly submit the details. Okay. From assessment year 2025. For example, if you are opted old regime in assessment year 2025, 24-25, you must declare as a yes in the offline utility. You will see in the next page. Okay. Then whether you are going to continue as a old regime or a new regime, you have to select in the next row. If you are opting the old regime for the first time, you have to select yes in the second table. We will see in the next table. Then only it will be very easy. Okay. In table A23, have you accessed this option under section 115 BAC 6 of opting out of new regime in IEA in assessment year 2025? So this is the first question. If you have opted old regime in assessment year 24-25, you have to select yes. If you select yes, you have to enter the date of filing Form 10IEA and acknowledgement number of Form 10IEA filed in the last financial year. Okay. If you select no, this will be disabled. These columns will be disabled. If you are not opting old regime in the previous year, now if you want to select old regime, you may select here. Do you wish to opt out of new tax regime? Yes. If you want to opt new regime for the first time, you have to select yes in this column. Okay. If you have opted the old regime last year, but you want to revoke it, you want to continue to the new regime, then you have to select as that you wish to continue to opt out of the scheme, you have to select no. If you want to opt for a new regime in this year, you have to select no, and you have to enter the date of filing Form 10IEE for withdrawal of old regime. Okay. So this is the changes in ITR 4. Even ITR 3 also, the same changes will be applicable. If you have already opted old regime, you may have to select whether you are going to continue or you are going to withdraw. Even if you have filed Form 10IEA after the due date of filing return, that means delayed, you have filed belatedly, you have to select no. The instruction is given in B. Please select no, even if Form 10IEA was filed after due date of assessment year 2024-25. So if you have filed Form 10IEA after the due date, that implies that you have not filed the forms. So you have to select no, because old regime is not applicable to you as you have filed the form after the due date. So once you have selected no, then if you want to opt a new old regime, you have to select yes in the B1. Then you have to file Form 10 IEA freshly and enter the acknowledgement number and date of filing here to declare. Then only you are eligible for an old regime. Okay. Then in ITR 4 also, the long-term capital gain under section 12A is these rows are inserted in verification, tax paid and verification tab above the bank details. You could find that total sale consideration, total cost of acquisition, and long-term capital gain has to be declared here. Okay. Okay. So the in ITR 1 and ITR 4, the major changes we have discussed. If you are opting old regime, an individual or HUF opting old regime, they can avail deductions under section 80C to 80U and avail deduction under section 10, 13A, etc. So from this assessment here, a schedule for availing deduction under section 10, 13A. For example, you want to claim HRA deduction, you have to fill a separate schedule. As we have already prepared for a Mediclaim policy, section 80D, we are already entering the breakup in a schedule. 80G also, we are already giving the breakup in schedule only. So nowadays, additional 4 schedules are introduced for claiming HRA and for claiming interest on borrowed capital. Okay. Simply saying interest on housing loan. And 80C, for claiming deduction under section 80C itself, you have to fill the schedules. For example, if you are claiming maximum 1.5 lakhs under section 80C, you have to give the breakup of that 1.5 lakhs. That may be a 45,000 of life insurance premium, we have to enter the policy number here. Okay, we may the balance will be the principal repayment of loan, housing loan. In that case, we have to enter the interest certificate document number or a loan document number, etc. So now 80U and 80D also, 80DD also, we have to fill a separate schedules, and 80E to 80EEB. So up to assessment year 2024-25, we just calculate manually and enter the figure in ITR form. Now we have to declare the figures in schedule. Then it will be auto-populated in the respective columns. Okay. For example, for HRA, we have to give a schedule, select as a, what is your place of work? We have to select the place of work. We have to enter the actual HRA received and actual rent paid. These details of salary will be auto-populated from income details column. And the basic salary, DA, the basic salary DA will be auto-populated from the salary details we have given. And the eligible HRA will be auto-populated here. This figure will be auto-populated in the respective column of deduction. Okay. The same applicable for the interest on housing loan. We have to select whether loan taken from the bank or other than bank. We have to enter the name of the bank or institution or a person who has given the loan, the loan account number, date of sanction loan, total amount of loan, total outstanding at the last day of financial year, interest borrowed. So this type of breakup has to be given for a claiming deductions. Okay. For ATC also, as we have already discussed, the breakup of amount, eligible amount, and their document number has to be declared in schedule ATC. For claiming deduction under 80U and 80DD, the nature of disability and amount of deductions, the type of disability, and acknowledgement number of Form 10IA has to be filled. The UDID number, if available, has to be declared here. Okay, it is not a mandatory, the optional one. And interest taken on higher education. So for that also, section 80EEE, and interest deduction available for a purchase of electric vehicle also, we have to give a breakup of the loan taken and loan outstanding and the interest. And okay. So other than this, mandatory reporting of asset and liabilities. There is a schedule called Schedule AL. If your total income exceeds 1 crore, you have to mandatorily declare assets and liabilities. That means Schedule AL. You have to declare the movable and immovable assets breakup in the Schedule AL. It is applicable for a what says, if you are not filling balance sheet in your ITR, you have to declare it. Last year the limit was 50 lakh. Now it is increased to 1 crore. For example, you are a salaried person, your salary and capital gain or any other income other than business income exceeds 1 crore, you have to declare your assets and liabilities in Schedule AL. If you prepared a books of accounts and you have already filled the balance sheet schedule, BS schedule, you need not to declare the assets and liabilities. But if you don't have any business income, you don't have a balance sheet, you are only having a salary income, or this year you are only having a long-term capital gain, your inheriting property has been sold for 2 crore and 1.5 crore is a long-term capital gain. In that case also you have to fill the Schedule AL. Okay, the Schedule AL has to be filled in ITR 2, ITR 3, ITR 5, ITR 6. Okay. Aadhaar number is mandatory. From this assessment year, we cannot file ITR without having an Aadhaar number for an individual. Okay. The foreign assets. the foreign assets has to be declared in the ITR. If a resident or a resident but not ordinary resident, a person having any asset in other countries, he has to declare this Schedule FA, and the value to be declared as on 31st December 2024. For example, if you are having a immovable asset in Dubai, then you have to declare the value of that asset in Schedule FA as on 31st March, December. The value as on 31st December 2025 in Schedule FA. Okay. If you are declaring the foreign asset, you have to declare the income arising out of that also. The asset may be a deposit also. If you are having a deposit in foreign nation and you are availing interest, you are getting interest from them, then you have to declare the interest in your ITR also. Okay. And schedules are going to be revised for a short-term capital gain and long-term capital gain. As I already told, it may be the reason for the delay in enabling ITR form for filing. Okay. Then, okay. Then I hereby given a link for the ATIC. It is a virtual storage prepared by my team. So if you click the link, you will get a spreadsheet. It will get updated every time, real time. It will be get updated. You may find the GST Act, notifications, circulars, GST instruction, all in one pages. You may find our YouTube videos link. You may find our ebooks. So this spreadsheet is under preparation. Every time you open, you will get a updated one. Okay.